Hey everyone, Justin Holland here with the Mad Insurance Show, making a difference in insurance. Wanted to make sure we have a formal introduction for a guest that we've got here, and we're going to dive into that in just a moment. But just as a reminder, I'm Justin Holland with Texas State Insurance Services, where we provide value and assistance on affordable insurance options for individuals, Medicare plans, as well as group benefits for those employers that are wanting to offer coverage as well. Palmetto Life Group is another division where we help out with life insurance, long-term care planning, Social Security analysis, and also brought in home auto, commercial, and umbrella policies. You can reach us at Texas State Insurance Services at 210-880-5316 or visit us online at txstateinsurance.com. Palmetto Life Group's phone number is 877-357-5316, or you can visit palmettolifegroup.com online as well. So as I mentioned just a moment ago, we've got a special guest. His name's Mike Papook from the Brokerage Inc. They're one of our trusted partners. Mike and I are going to go over, individual health insurance coverage discussions that I think are going to resonate. And this is going to be an important visit for those that are on individual coverage plans or looking to get onto an individual coverage plan this fall. It's just not like what it used to be years ago. It's probably for the past decade. You just can't enroll into a health insurance plan and just expect that to start up. We'll dive into that, probably into a little bit more specifics as well. But there's a lot of changes coming. And I'm real excited that we've got Mike here at the studio with us to discuss this. And he's going to give us an idea on changes on tax subsidies, maybe some carrier behaviors, alternative options that we need to consider, and schedule and plan for a review. And I'm going to tell you right now, if you have an agent or broker, you're going to want to visit with them soon. If you don't have an agent or broker, visit with us here at Texas State Insurance Services as soon as possible so we can come up with a game plan and let you know what some significant changes we could be seeing in the future. So, Mike, let's jump right in and have you introduce yourself to everybody and give us a little background, give us some insight on what you see on the changes, and we'll dive into a little bit of into the discussion. But more than anything, who's Mike Papook? Give us some history here.
First off, I'm very honored to be here as a live guest for the show and everything. So thank you for even thinking of us here. And also thank you for saying my last name correctly. I get so many people that come to me and say, what is your last name? Or they butcher it, but you said it correctly. Mike Papook. Papook is Syrian Romanian, so it means shoe. I learned about that not that long ago.
I just learned that.
Very unique. But a little bit about myself. I'm the National Health Sales Director with the Brokerage Inc. The brokerage themselves, they work with over 25,000 agents nationally. So we have a really good footprint from that side. And the company's been around for almost 50 years at this point. As a matter of fact, you are invited to our 50th anniversary that's coming up anywhere between April and May of next year.
We're looking forward to it.
Yeah, it's going to be a blast. So please show up for that event. But our job is honestly, what's the secret sauce, right, when it comes to the brokerage? So it really just comes down to service. What are we doing to take care of people, our agents, our partners, put them in a situation where they can really grow and excel in the industry. And ultimately, what I care most about is educate our partners to educate the consumers. So that way they're always in the right plan and continually taken care of year in, year out.
The brokerage has been instrumental in the 10 years, over a decade actually. It's probably been almost 12 years since Texas State Insurance Services, since I started the company. And I was mentioning to Mike, I was doing tabletops at H-E-B's, a local grocery store.
That's right.
And building up that awareness and our clientele. And we're pretty proud of the business that we built together with the brokerage and the support that you've given us, which has been dynamite. Something that I also wanted to dive into with you, Mike, is just kind of give us a background on your credentials prior to the brokerage and insurance industry, if you could.
Absolutely. So all of my insurance experience or expertise has really been for the last 18 years at this point. So prior to coming to the brokerage, I only worked for one other company for that entire timeline. And literally, I started off as a 1099 agent myself. Wow. And I actually sold for about 6 or 7 years at that point, running my own business. Then the Affordable Care Act came into place. And that's where a lot of agents, especially in the under 65 community, said, wow, commissions are getting cut. I can no longer stay on the under 65 side, or maybe I'm going to move into a completely different industry altogether. I stayed put because I saw an opportunity. I saw an opportunity because when a lot of people leave, when there's disruption, I always saw that, hey, you know what, there's still an opportunity to go out there and take care of people. Because if we have 100, 200, or even 2,000, 3,000 agents that leave to go do something else, those consumers are still going to need help. They're going to need to know their options. Exactly. So that's where I stayed and on that market. And I was very grateful that I did and learned about the, unique opportunities such as cross-selling, which got me then into a sales management role.
Okay.
Cross-selling really allowed me to make sure that we helped out from a retention perspective, really going beyond than just the health side of things. So we talked about dental, vision, accident, critical illness solutions, for example. And because I was able to learn how to be just as profitable prior to the Affordable Care Act coming into place, I was brought on as a sales manager with that FMO to teach people how to cross-sell, how to take care of your consumers. What are the proper needs analysis questions that we need to ask so that way we're putting people in the right benefits with the right budget in mind.
I didn't realize that you'd been in the industry that long. I knew you'd had the prior, life, so to speak, prior to the brokerage, but that resonates with me because back in 2012, when the ACA, the Affordable Care Act, the largest piece of legislation of its time, came in, I saw an opportunity because I was in a whole nother industry and I had that entrepreneur spirit. And I said, hey, this is something that maybe I can go into because it's leveling the playing field, so to speak, with other agencies compared to newbies like me as well. So I didn't realize that. So that's I'm in good company.
Absolutely.
You took advantage of that disruption as well. So I appreciate you, Mike, giving us a little bit of background on the Brokerage Inc. I can't stress they've been a great industry partner with Texas State Insurance Services and Palmetto Life Group for years. So I'm real excited to have you on the show. I guess let's start to dive into some of the talking points that we want to provide some awareness on.
Mm-hmm.
And I think the main one, not the main one, it's one of many, but the premium tax credits that we rely on, we talked about that a handful of times just prior to meeting here for the show. Those might not be extended into 2026. And both you and I saw that value where we had that consumer, that household, that family of 3 or 4 that was at an income level, let's just call it a 6-figure, just over a 6-figure income. They went from having to possibly cough up $1,800 a month, maybe down to $500 a month for family coverage. That was a huge win for agent brokers like us to provide that value and assistance for affordable insurance. And we're seeing that possibly go away. So would love some insight from you on what we can expect for folks on the marketplace plans, because we could see some considerably large costs and a disruption going into this fall for the New Year's plans.
Yeah, absolutely. So let's break it down real quickly, right? So when we talk about the subsidies, right? Subsidies themselves are not going away at all whatsoever. I want to make sure that the viewers know and understand. We're good? Okay. I want to make sure that the viewers know and understand that we're talking about the enhanced subsidies. So the subsidies that were actually put into place going back to 2020 with the IRA and the American Rescue Act plan and what that happened. So with the enhanced subsidies, and I was joking around this earlier, but really the idea was, what can we do to make insurance more affordable?
Yeah.
Actually make the Affordable Care Act affordable, because prior to that actually coming into place, I had to teach people how to pivot on the fly.
Yeah.
Because you're going to see a lot of situations back then, we're talking back then, you saw a lot of situations where it's just like, I'm a family of 4. I can't even afford $1,200 a month.
Uh-huh.
And that was back then, $1,200. Now
we're not even talking about inflation where we're at today.
Gosh.
I mean, it's been critical.
Absolutely critical. So what I will say is that's what's key right now. What's going to happen to it? Honestly, I don't know. And I do know that if it's extended, if it's not extended, where do we need to go, as far as those actual pivots to ultimately take care of our consumers? But what I will say is that we're headed towards government shutdown. And one of the primary reasons that we're headed towards a government shutdown is over this exact issue right now.
Yeah.
What's going on with these enhanced subsidies? Now, I know I lean right when it comes to my political senses, but This is something that the Democrats are very heavy leaning towards as far as what can we do to make insurance affordable versus if these enhanced subsidies go away, expect a 75% spike in average premiums going up. And really, who can afford that at this point?
Where I'm concerned, Mike, is I just don't think, or I don't feel that our legislatures know how critical this really is on
They
how many
don't.
people. And again, that's a testament. I'm going to plug myself here as an agent, us agents and brokers that are ground floor on trying to help these consumers navigate this. We've been trying to do it for a decade now with the ACA. And I still just don't feel that our politicians know what a critical crossroads we're at
And you're
going into
absolutely
this
right.
fall.
Think about Speaker Mike Johnson, what he said a few weeks ago, right? Oh, well, we have until December 31st to figure out what we need to do with these subsidies. I'm sorry, but November 1st, which is open enrollment, is right around the corner. And do you think consumers and agents are in a position to say, maybe you'll get this and maybe you won't? And then let's say if it's not enhanced, if that doesn't go through, then what does that look like as far as the client pain points that are going to come
We're
through at
not
that point?
giving them enough time, not just the consumer, but us, the agent broker, to be able to try to help navigate that. And then let's face it, when you get into these fall enrollment times, you've got Medicare open enrollment going on. You've got the individual marketplace open enrollment going on. You have group employer plans that are typically renewing and going through their stages and transitions. And that's a finite window for those consumers to say, hey, maybe I need to stay myself on the company plan and then get the family, onto a marketplace plan because of the family glitch that a decade later they finally fixed, 36 months ago, that we were very thankful that they did. But all these strides and I will throw this in there, Mike, too. I remember even the Trump administration, they said, hey, we're not going to dismantle this thing. We want to make it better.
Mm-hmm.
Okay, I was all on board on that.
Same.
And I think we need to hold them accountable or just remind them and say, hey, listen, this is affecting a lot of people. We are living longer lives. We're not necessarily living healthier lives, is what I brought up in last week's show. And it'll be interesting to see how this plays out. But yes, as you and I are visiting for this show, we're on the brink of a government shutdown tonight at midnight.
We are, and I even woke up at 5 o'clock this morning to kind of figure out what's the news, what's the latest, what's going on here with the government shutdown. And the latest that we're hearing is that, at least from the Democrats' perspective, is that Trump is now more open to hearing these things out, but it's going to take a little bit more time. So are we going into a shutdown? Very much most likely we're heading in towards a shutdown.
Up for that.
But it's great to see that both leaders from both aisles, from both sides, are going to be coming together to talk through these pieces. And really, at least the media was out there saying, hey, you know what? Maybe Trump didn't really know the full impact of what would happen to consumers out there if these enhanced subsidies go away. So giving him kind of like a Speaker Mike Johnson with Trump, what can we do to make sure that everyone is educated on here's what's going on and here's what the impact is going to be for your constituents or the citizens in this country? And is that the route that they want to take?
So that brings something that just popped in my head while we're discussing this, and then we'll go over some more of our topics. We saw the Trump administration during during COVID. I was really hoping they were going to provide some special election option periods throughout that whole chaos. Not until he out of office did they start bringing in a special election period. I think if they do make these last minute changes, I think it would make sense to provide an extended window to sort through these enrollments. I don't know if you agree on that or not.
Oh, I completely agree with you. I just know, like, when we go through the CMS final rules, for example, I mean, what has been thrown out there as far as you have anywhere from only 8 to 9 weeks starting next year to really, so that way if there is an extension at all or an SEP, they actually put stuff in place that actually limits these types of windows altogether. But that's where potentially state exchanges could actually dive in and say, you know what, we can put in whatever SEPs that we want. That's because how we run our state.
It'll be interesting if Texas decides. I know some other states have tried it. Some have probably been a little bit more successful than others. Obviously, the first year you try to disrupt a change, it's going to be chaos. So just to provide some context, the marketplace is all-encompassing around the country as far as individual health insurance. but some states, if they elected to, could open up their own health insurance exchange, so to speak,
Mm-hmm.
and you're basically subject to those plans. We don't see that happening in Texas right now, but obviously you'll hear it from us on the show if anything gets updated on that. So that gives us an idea on premium tax credits, and Mike and I could probably spend the whole show talking about that. But we're also going to bring up the fact that the insurance carriers' premiums are going to increase. So not only could your individual plans, you're going to lose, that tax credit or subsidies to bring the premiums down, you're also going to face an increase. So that's why we're seeing that 75% number. Forgive me, that's combined, right?
That's combined. I would say probably you're looking at closer to 20%
Okay.
Of an increase if you're seeing the enhanced subsidies stay.
Okay.
Here in the state of Texas, we're seeing carriers that are asking for increases as high as 45%
Wow.
even.
And another thing that Mike and I were talking about before the show is not only are we having to brace for tax credits being disrupted, insurance premiums increasing on the individual market, companies like Texas State Insurance Services that we manage and run, we handle the employee benefits for small groups. And those plans are going to be facing, double-digit increases as well. So as much as, we wanted to look at alternatives, okay, if you come off the insurance plans and individually, maybe the company or small business you work with could provide more affordable options. Well, that's narrowing that gap as a more affordable option, even if the employer is pretty generous on their contributions, and depending on if they're going to cover an employer-sponsored part or maybe some of the families as well. One thing that I wanted to bring up too is what a major carrier is exiting the individual health insurance market, and we're sending out notices to our clients that are on these plans. But Aetna announced that it was exiting the ACA individual family marketplace starting at the end of the year, and it really just is because they weren't making any money, I guess, and just saw a disruption and didn't want to play in the arena of the Affordable Care Act. Do you have any insight on that Aetna exit?
The Aetna exit was more of an overutilization at that point, and coming in really hot and heavy for the first few years after re-entering into the market and not realizing, oh my gosh, like this is where we're at. What do we do at this point? And that's where they said we just have to pull the plug on it. And I was coming back from Medicarians from Las Vegas, and all of a sudden getting text messages from everyone. Hey, did you see the news? Aetna is pulling from the market. And I was shocked because literally not even 2 months prior, I was sitting down with leadership and talking about, hey, here's what we're looking to do. Here's how we're looking to tackle 26, 27, 28. We're in this for the long haul. So it seemed like that there was something that was missing in general. The rates were too aggressive. Maybe their network was way too open. It reminded me a lot of kind of like what happened in the very early stages of the Affordable Care Act, even with Assurant Health. They offered a very open network, PPO. They were one of the first.
I remember the PPOs that we had available in the marketplace.
And that was a huge selling point for me. Hey, very few companies out there during the Affordable Care Act actually offered a PPO plan. Assurant Health did. And what did that mean? Especially for people that were self-employed, like truck drivers. That's a very important ask. That's a very important need. And what are we doing to help that out? But really what it came down to was a lot of carriers just didn't know what to do. There was overutilization in general, especially when you have an open PPO network. And to control costs, and we've seen this time in, time out, what do? You switch from a PPO to more of like an HMO type, cost-controlled type of network, or even value-based care type plans.
And I think at some point, Mike, I don't know where the PPO is going to stand, that network. I think maybe in the future it might be that long-lost dinosaur, because of how these carriers and the industry is trying to constrict and control costs. But, that Aetna, we sold a lot of gold plans. We helped people enroll a lot of the gold plans. They had a bronze plan prior that was very popular, and then they scaled that back. So we're going to eat our Wheaties prior to this enrollment season because of those changes. But I think it was important for us to bring up the Aetna exit, because there's a lot of people out there that utilize them for their individual health insurance, and we're going to have to help them make an adjustment and a change. One more thing that I wanted to add, and then I wanted you to kind of close us out on navigating the changes that we're expecting and discussed right now, is the PPO plan.
Okay.
I can't tell you how many phone calls I get of people looking for health insurance. And Justin, I want a PPO plan, and that's about it. Just find me, insurance, and I need to
And
make
it
sure it's
has
a
to be a
PPO.
PPO.
And man, it is exhausting, and I totally get it. I want to let everybody know as a reminder. Typically to get a PPO network, to have a true health insurance plan, it's going to be through an employer-sponsored plan in most cases. There are health coverage options, not health insurance, that piggyback off of PPO plans that are out there as well. And then everything else is typically an HMO or EPO on the marketplace. However, some states have PPO plans on
They
the
sure do.
marketplace. The trade-off is an exorbitant premium. That's what I've noticed. Like in Florida, for example, we've got some clients over there, and we were shopping. I was like, hey, we got some PPO options. But once we looked at that premium, we're like, okay, we're going to scale it back to the HMOs or the EPOs.
Absolutely. And, it's a dinosaur at this point. In a state like Pennsylvania, for example, PPOs are pretty prevalent out there.
Really?
Absolutely.
Wow.
So coming originally from Pennsylvania, coming to live in Texas now, being in Texas for a year and a half at this point, walking in, I was like, wait a minute. Are you telling me there are 0 PPOs even on the off exchange side of things, at least from an ACA compliant perspective? And the answer is, sorry, Mike, there's 0 PPOs out there. So I think there's a fear, especially with what's been happening here with the Aetna exit, Bright Friday. Think about that, right? How they've been exiting. So I think the Texas DOI needs to kind of think outside the box a little bit. I think even with carriers, just go out there, and this is my call to the carriers out there that might be listening. Just look at off exchange. Look at an off exchange PPO option. The first person that does that, no matter the price, I feel is the first person that can dominate that market.
That's a great point. And I'm hopefully they're listening to that as well, because I think that could help those carriers that do want to take on that potential PPO plan. It could benefit huge.
Especially those carriers, the ones that are focused on ICRA, that's going to be a big deal.
Agreed. And we're going to talk about ICRA here in the show as well. But I wanted to make sure we just recount premium tax credits could very well possibly be going away.
Mm-hmm.
Insurance carriers are raising their premiums going into 2026. We're seeing the average around 25%. With the combined increase of those tax credits going away, you're looking at a 75% increase collectively that we need to be bracing for. We talked about Aetna exiting the market as well. And as far as some of the pivots that you're going to have to make to change plans and really be proactive in this upcoming enrollment season for this fourth quarter, especially as Medicare open enrollment starts in a few weeks, and then the ACA is going to kick off November 1, basically in 30 days. It's going to be here like that. Mike, I wanted to see if we could talk about maybe like an impact assessment. What are the big levers causing the stress on the individual plans? Is it medical inflation, claims risk, legislation? I think it's a matter of all of that, and I don't want to be redundant on talking about that, but can we talk about that impact, and also the rural and low population areas could be affected by the marketplace changes?
Yeah, let's definitely talk about that. And I just want to go back to answer your first question, right? I started in this insurance, in this industry about 18 years ago. Okay. I remember a day when I could just choose a $250 deductible plan, $500 out of pocket with Capital Blue Cross in Eastern PA. And you know how much that cost me?
How much?
$82 a month.
This is prior to me getting into the industry and business. Those are the good old days.
Those were the days when, and now, granted, this was prior to the Affordable Care Act, and granted, I had to pass underwriting and a health risk assessment, all sorts of things to make sure that, hey, I'm a risk that they want to take on, So you would have situations like preferred ratings, standard ratings. You would have situations where you would even say, we'll take you on, but we're not going to cover certain conditions, anywhere from maybe a year or even up to the lifetime of the plan as well.
Yeah, you had knockout questions that would basically,
Hmm.
keep you from getting coverage or modify what they would underwrite.
Carriers, I'm only talking Pennsylvania here, guys.
Okay.
Carriers like the Blues, for example, were notorious at that time to say, you know what? Even if you had a cut in your hand, and I've seen this before because we went through an underwriting process, cut, stitches, you know what? We're just going to decline this person altogether. We're not going to bring them on. And then you had carriers such as Aetna. Oh my gosh. Aetna was one of the first products I sold on myself when I got into the
Really?
industry. That HMO 20 plan, whoo, I miss it. Super easy, nice plan. No deductible. You just simple copay structure for everything. And it was really nice because, quite honestly, Aetna was also really great when it came down to helping to just take on and say, you know what, we're not going to decline you. We're going to take you on. Maybe a 1 year waiting period, but we're not going to decline. So Aetna was very lenient towards these things. But think about that, right? Then we think ACA, right? We went from affordable plans to all of a sudden, if I wanted to go on an ACA plan myself and I didn't qualify for subsidies, a bronze level plan back then, and what do you remember in 2014 time range? What were those out of pockets? They were not 10,600 like
Yeah,
we're
they
looking
were
at now.
not. They were probably around the 6,000 range, wasn't
I would say in that early 6,000 range. So think about that too. So when we talk about inflation, and that's why I'm sharing this story. That's why I want to share about all of these things, is because I want to talk about the inflation just from an out-of-pocket perspective, but also from an inflationary perspective when you go to use the insurance. Okay. So think about the HSA piece that we were talking about earlier. So, okay, eventually I go into an HSA. Even as early as 10 years ago, if I go to use that HSA plan, you know how much it would cost me to see a regular doctor back then after negotiated rates?
I don't know, $80 to $100 maybe.
$75.
Yeah,
Exactly. I knew that I was in that $60 to $75 range.
which is doable.
To me, that felt like a copay for
Yeah.
some scenarios, right? Now, fast forward to where we are today. Now, I have an HSA plan still for myself and for my family. Now, I know that if I need to go and utilize just for a regular doctor visit, what does that look like now? What does that feel like?
Easily $100 plus, depending on it. That's just the primary care. We're not even talking about specialists, possibly.
Exactly. So I've seen on average for my family, every time we see a doctor visit, $125. So right away, I was just like, you know what? Forget this. We're going to telemedicine at this point. If you have a cut, a scratch, or anything like that, I'd rather pick up the phone, talk to a doctor, and it costs me nothing
Yeah.
to save myself and my family that money, especially when you have two young kids that are very accident prone.
You bring up telemedicine. That was a factor in HSA plans, being covered or not. I mean, do we see that being factored in, or is that going to stick, do you think, as far as telemedicine for HSAs?
I think telemedicine needs to be part of the conversation, whether if it's HSA or a regular plan in
Agreed.
general, especially if you're going to be going out there and maybe some plans will have doctor office limits or even unlimited visits. But sometimes, especially with those bronze plans, do you really want to be subject to deductible and co-insurance, or do you want to pay that $75 out of pocket for a copay for some of these plans? The answer is probably not.
Yeah.
Save
No.
money. Do the right thing.
We want to try to save money, especially as we're bracing for impact on this fourth quarter enrollments. I wanted to revisit, and we were going to talk about maybe impact assessments, carrier exits. We've already discussed that.
Mm-hmm.
Alternatives, bridging the gap strategies on the disruption that we're seeing, and short-term medical plans are out there, indemnity plans. Could be an alternative to the marketplace. And Mike, I wanted to get your take and feedback on some of those, like what we have with United Health One. I think us as an agent broker are really need to start engaging that for our consumer as well,
Yeah.
as we see these changes. Can you give us some feedback on that?
Best piece of advice I can give to all the listeners, especially for the last 5 years, where we are doing nothing but selling $0 plans. I'm talking to a lot of partners in this industry. And the mentality has been, for the most part, going and selling $0 plans and not at doing a proper needs assessment or any of those pieces. And that breaks my heart because from a salesperson perspective, you have your introduction, you say hello, you're connecting with people,
Yeah.
you're trying to really create that relationship and trust, knowing that, hey, I have your best interest in mind, both benefits-wise and budget-wise. In order to do that, I have to ask you certain questions. You'd be surprised how many people don't ask a simple needs analysis question. You run into a lot of people that just put them on a $0 plan and that's it. Now we're potentially going into a situation where if enhanced subsidies go away, what do?
Let's dive into that just a little bit before we
Sure.
dive into more the $0 cost plans. As we helped many clients with Texas State Insurance Services shop the individual marketplace, depending on what they qualified for, and it's based on family size, ages, your adjusted gross income, sometimes even where you live. If you were only in an area that just had a few plans available, that could adjust your subsidy. But what Mike's bringing up here is the fact that there were plans where people would not pay a premium. So there were agents and brokers out there that were leading with that as a value add, not necessarily looking at the value of the plan for doctors' networks, the catastrophic coverage scenarios, the copays, if there was a prescription drug deductible embedded in the plan. There were some scenarios that needed to be vetted out for the consumer instead of just leading with the fact that, hey, you're going to qualify for this plan and it's going to cost you $0. Run with it. Am I wrong in saying that, how we dive into that on what that $0 scenario
Yeah, that's a great way to
at?
dive into it. And unfortunately, people, I feel like agents and brokers forgot how to be agents and brokers because they led with the 0 and never really got a chance to really connect with people. The goal for a lot of people that I talk to when running from even a call center mentality is more of like, hey, let's get this hello to goodbye done as quick as possible. Let's keep it anywhere from 12 to 15 minutes. I'm sorry, but I don't think 12 to 15 minutes is doing the service and the due diligence that clients require that need the care and the expertise that they need.
Because basically what it's going to boil down to this fall is, and I'm taking this personally with us through our brokerage at Texas State Insurance Services, we're going to have to shop the marketplace, no doubt, and see how that shakes out for the consumer or a client or a new client that calls into us for the first time. But also we're going to shop those alternatives.
Yes.
That short-term medical plans, maybe some indemnity coverage that can complement the marketplace plans as well. So can you give us an idea on where you think that the short-term medical, those indemnity plans come into play? And I know we were getting there, but I'm curious if we can dive into that a little bit.
Yeah. What I would say is, especially in the state of Texas, and I say Texas in particular is because short-term was already set to be released because you know how during the Trump era, short-term medical plans were going up to 3 years.
Correct. Yeah.
Okay. So they're already talking about bringing that back. The state of Texas decided we're not going to bring that back.
That surprised me.
Surprised me as well.
When I got the notice from the carriers, I'm going down the list of the abbreviated states that were all in line, and I didn't find a TX on there at all. So
Correct.
That was very surprising. I mean, do we have a reason on where the justification was on that?
I've yet to get a reason on that or any justification. I just do know that, hey, you know what? Some states outlawed short-term in general. States like California, for example.
Okay.
You can't even sell short-term there.
No kidding.
Yeah. So even so every state is going to make their own decision as to what they feel their citizens' options are going to be. I honestly feel that every state should give their citizens the best options that they feel is best for them. You know, why limit those options?
So short-term medical, everyone, is something that we actually engaged quite a bit for our consumers prior to maybe 2020 when we started seeing the extended tax subsidies come into play for individuals. Just because, short-term medical was actually just that. It was a bridge between, maybe your employer-sponsored plan to you getting employed by another sponsor, or getting onto an individual plan, maybe to bridge the gap between going off an employer-sponsored plan or Medicare. It was kind of a place filler. And then when the Affordable Care Act came to fruition, it started becoming a full-time plan that people wanted to leverage.
Yes.
You could still, to this day, you can pick the deductible, you can pick the maximum limit, all of that. So can we dive in a little bit on?
Let's dive into that. Yeah, absolutely. And the alternate solutions is something that excites me. It's because to me, it's still an uneducated part of our population that agents need to know and understand, both from a short-term perspective and also from a hospital indemnity or fixed indemnity perspective as well. The one thing that I will say is make sure you sell it for what it is, right? Short-term medical is not what? It's not ACA compliant at all whatsoever. So pre-existing conditions, not covered. Pregnancy, maternity, not covered.
Correct.
With some carriers, you might get some level of coverage regarding any complications for these pieces, but that's only some carriers. Not all of them do these things.
Yeah.
Here's what you can get as far as like a benefit if you go towards a short-term medical, especially in states that actually offer short-term medical for more of a long-term piece. What did we talk about earlier? PPOs, right? In states like Texas, where really when you go to the marketplace, the only way that you're going to have access to a PPO is not through the marketplace currently, but through group benefits as well. So getting access to a PPO is going to be something that a lot of people will say, that's what I need. That is my number one ask. If I can't get this, why should I have insurance in the first place? So that's where you're going to find short term with some of these carriers where PPO is going to be, or even cross-state insurance, cross-state coverage, I should say, is going to be a key piece to all of that as well.
So the one thing that Mike and I were discussing before the show, and I'll kind of take the lead on this, as we look at alternatives for our consumers and for our clients out there, is the short-term medical plans. You know, I'd love for that to be a long-term solution. Again, Texas did not extend that to where we can really leverage that, I think, as much as we would like to going into the new year for 2026. But we have access to what's direct primary care models on our group benefits side. And I was kind of telling Mike, I kind of wanted to tease the audience with this. We're looking at a solution to where, hey, once we have an idea what these marketplace plans are looking like and what those costs would be and how they're going to relate to each and individual client that we address it with, maybe we do a high deductible marketplace plan, cover you for that catastrophic scenario, and maybe even have some generic medications that are covered within that as well. And then you have a direct primary care subscription to where you've got unlimited doctor visits, unlimited urgent care, unlimited telemedicine to complement that gives your family members the freedom and flexibility to do that. I will tell you, being an agent broker here in South Texas, some of the alternatives we need to take a look at with direct primary care or these short-term medical plans is those that don't have a social security number. We've got individuals that maybe are in the process of residency or not, and they're looking for protection and some type of health insurance. And that's another, there's hundreds of thousands of people, that are probably in that situation.
And think about what came through the final CMS ruling. What were one of the pieces that is now defined as lawfully present, right?
Correct, with DACA.
With DACA. So now DACA recipients are no longer considered lawfully present in the eyes of the Affordable Care Act. So you have to look at alternate solutions because they're still going to need protection. They're still going to need some layer of coverage. So we talked about, you said direct primary care is going to help out with that. Also, if I can throw this out there as well, United Health One is a carrier that, hey, you don't have to worry about socials, ITINs. Just choose the plan that works best for them, and they receive it.
And if you need a link to the United Health One plans, we've got a link directly through Texas State Insurance Services that can help you shop those plans. We'll help you and handhold that as well. But I think if your agent or broker is not bringing that up as an option, might be time to shop, and see what your plans could be alternatively on what you're on the marketplace. So yeah, United Health One. And we've done quite a bit of business with them. It's not just their indemnity or their dental and vision that they've got as well.
Absolutely. And the one thing I think we really do need to discuss too, so we talked about direct primary care, short term, but also short term is currently in the state of Texas short. No pun intended there, right? So what would be a more permanent chassis model for healthy consumers that if the subsidy cliff were to return, in other words, people that are above 400% of federal poverty level, what are we doing to keep the benefits there, the benefits they're looking for? But let's talk about what that could look like to make sure it's still affordable. There's something out there that's affordable for them.
Yeah, and I get nervous talking about that because we again, Mike and I talked before having the show today, and I'm concerned because I feel that we're hitting a crossroads in the health insurance industry, from Medicare scaling back, from the Affordable Care Act. Obviously, what we're talking about today on the subsidies going away, increases in cost. the small group health insurance carriers going up, something's got to give, Mike, to where we could run out of solutions to try to bring to the consumer as well.
Yes.
I hate to say that, but I mean, we're kind of there.
Uh, I feel like we're approaching that. I always feel that there's always going to be a need. Uh, as far as what the future holds and what the future looks like, I always say stay ahead of what's going on out there. Stay educated, and no matter what happens in the market, really always make sure that you know and understand that you're doing the right things for your consumers when it's all said and done. Because I agree with you, man. There are times where I wake up in the middle of the night and be like, okay, what's going on now in this
What do we
industry?
got next?
Funny joke, you can see all the gray hair here, man, but really, I'm only 25 years old, man. I'm not 42, I'm 25. The industry did this to me, all the late nights and trying to figure out where are we going, where are we headed, but most importantly, how this impacts our partners, our agents, and the consumers out there. But I always feel that with the agents out there, there's always going to be a need, and agents are going to need to go out there and educate their consumers and take away almost like that anxiety
Yeah.
of what's next, what's happening to me.
I agree. I think we can take on that burden, and as long as we're prepared and know every option that we have available, we can really bring that value to the consumer and help them truly navigate, some changes that we've got coming. And I agree this industry has made me get more gray hair, lose a little bit more hair. Actually, I'm losing some weight from the weight that I've gained in this industry, so that's helped. I want to segue into a quick promotion here and remind all of our listeners that Texas State Insurance Services is holding a weekly Social Security and Medicare 101. Now, we have that at the office every Wednesday at 12 p.m. You can stop by our Stone Oak location and visit us in person for that. We'll have some snacks for everybody that wants to attend in person. You can reach out to us. I'll give the phone number in just a minute, or go to the website to secure a seat for you. If you can't make it in person, then you reach out to us and we'll send you a link to just log in remotely and join us remotely on that show. But some of the topics that we go over on this luncheon every week, Social Security specifically, regulations, claiming strategies, maximize the benefits of your Social Security, as well as how to receive a personalized analysis in planning. I myself, Justin Holland, am a registered Social Security analyst. There's only a handful of us here in Central and South Texas. We're really proud of that because it's not an easy designation. Social Security is as boring as it sounds, but we wanted to make sure that our brokerage, Texas State Insurance Services and Palmetto Life Group, is providing value, not just helping you enroll in Medicare plans or individual health. We're here to develop strategies, and that Social Security is ultimately a starting point, believe it or not, on your Medicare. So we help review that. The Medicare part of the luncheons, we'll talk about Medicare's A, B, C, and D, as well as the outlining coverage options that you could have available to you, and also discuss enrollments, penalties, eligibility, and future changes that we see coming into the new year for the New Year's plans. But again, it's a Social Security and Medicare Workshop 101 that we have every Wednesday at 12 p.m. You can give us a call at 210-880-5316, or you can visit us online at txstateinsurance.com and visit our events page and schedule that review. If for some reason the 12 o'clock time doesn't work for you on Wednesdays, still reach out to us. We'll schedule a one-on-one visit, or we'll get you on the next Wednesday's review and luncheon so we can get you on the list of attendees. So just making sure y'all know that. They've been very well received, and we've enjoyed the luncheons on how to service the area on Social Security and Medicare. So we've been able to talk about a handful of options on the Affordable Care Act, alternative coverage, some details there, Mike. I guess we've talked a little bit on the short-term medical, fixed and indemnity, hospital plans. I don't know if we talked too much on that. We brought up the fact that I'm trying to bring in a direct primary care model.
That's right.
With, possibly complementing a high deductible plan. We really don't know what that'll look like until we get to see the plans and options out there. But a couple things that I wanted you to bring up and discuss. Let's talk about ICRAs and then also the sharing ministry plans. I think those are important to bring up. But I think we dive into ICRA And hopefully we're going to have maybe just a show just on ICRA so we can help educate, those employers out there that are looking at alternative health insurance options or affordable health insurance options out there.
Yeah. And I would definitely second that as well. I think that's got to be a big segment that you do for your next
Agreed.
show for sure. We got to get people educated on options and what those options are. And going back to as early as April, when people approached me and said ICRA, I was like, what are we talking about right now? What does that stand for? Right. So I am no means coming out here and saying I am the ICRA expert yet at all whatsoever. But when I do know that there's year over year growth in this segment, 30% growth. But why is the growth even happening in the first place? I think that's what's exciting, right? And a lot of this comes down to the small business market altogether, that group market altogether.
Right.
So when you're seeing, as you mentioned earlier, double-digit rate increases when it comes to small group, correct? What sort of rate increases were we seeing on your end?
So I'm glad we're bringing this up, or you asking me this, because pretty much every small group renewal we had was double digits.
Oh my.
Okay. Some of our groups, with over 200 employees, 150 employees, we were seeing 30, 40+% increases. Okay. Those were some tough conversations for us to battle. And it was just claims history. Some individuals just shot claims coming in and creating some disruptions on these level funded plans.
Exactly. So think about that, right? Whether if it's a group of 2 or a group of 250, right? Everything that happens within that group is your rate. It's your history as far as like claims and all those pieces, correct? So your premiums for that group will depend on if you're healthy or if there's a high utilization, correct? So the concept of ICRA is let's take a group chassis concept, but what can we do to take it to the individual market so that way instead of having to rely on a group of 2, 5, or even 250 or more, where maybe the utilization is higher, then you're running into these scenarios of 30, 40% increases. What are we doing to take it to more of a stable individual marketplace? Stable, right? Especially with what we've been going through for the last few years, to provide, number one, rate stability. Number two, more control for the employer to help to decide how the benefits are going to be utilized. But also number three, for the employee, freedom of choice.
It does give them the freedom of choice, and I think it's twofold. It allows the not the carrier, but the company, the employer, some relief. They have to battle these increases. Some of them are out of their control. On the small groups, where it's under 50 employees, if it's an ACA rated plan, they're basing it off of everybody's age. You're restricted. Underwriting doesn't even play a factor in that. So I see some relief coming to the employer on that, but also empowering the employee. Maybe that plan on that group plan isn't the best plan for them, and they have the ability to go to that marketplace and shop multiple carriers, multiple plans. They could possibly put themselves on one plan and the other family members on another.
Correct.
So having that flexibility, I think will be well received. I just don't think we've had that tilting point, for ICRA to really gain the momentum that it really should, Mike. But I'm welcoming him with open arms.
I think it's going to be a state by state basis, right? So if you're going to see that group plans are going to be level with individual market as far as cost goes, and the PPOs here, they're going to stay here.
Yeah.
States like Ohio, for example, group is here. It's really up here. I have to remember that I'm on.
We got you video and on the mic.
That's right. So group is going to be expensive. Maybe from an Ohio perspective, whereas ACA individual market coverage is going to be on the lower end over there.
Yeah.
So then maybe there's room to grow over here to provide where the employer could say, you know what, I'm going to take that savings, provide it right back to you in the terms of maybe offering more money of coverage for your family. Maybe we can offer dental, vision at no cost to you. Put it back to the employee, but still give them the choice of carrier or coverage that they would like.
Mike, we had to dismantle a handful of group plans, more so last year than this year, although we had to do it a few times. where the group renewals were just too overwhelming, and they couldn't compete with those marketplace plans because we'd have to dive in. And this is a testament to an agent and broker going above and beyond for you too. It is not easy having to shop individual plans for all the employees in every single scenario. A lot of individuals that just focus on group benefits really don't want to take the time to shop the individual plans for each individual employee because it's going to vary on every scenario by that.
Yes.
And we pride ourselves on that. We pride ourselves on being able to make sure we dive into that. And it opened up the ability for, hey, yes, this employer is not going to offer a group benefits plan, but everybody got affordable coverage on the marketplace, and they were able to contribute to the dental, to the vision plan. So there was still a value add that the employer, because these employers care about their employees, they want to still provide some assistance towards the benefits, but that was a scenario that came up, where we were having to very well dismantle plans and just get everybody on individual. I'm hopeful that as the ICRA evolves, we're going to be able to re-engage those particular employers and do an ICRA, analysis and maybe get them on that as well. But we will absolutely have, an ICRA episode specifically diving in on that because there's a lot to process.
Originally, that was going to be part of the One Big Beautiful Bill Act, right? There was actually a carve out specifically for HRAs, ICRAs, that sort of thing that was going to include federal and state.
And incentivize the enrollments of that?
Oh, yeah, absolutely. But when it came through and we got the final version of the bill, that was taken out altogether. I believe it was taken out by the Senate side as well. So
when disappointing.
Yeah, so when you bring them on, your ICRA group, and we're talking about these things, I would love to know and understand kind of like where do they see the market going at that point as well?
Agreed.
What do they see coming down from a legislative perspective? Because I feel that might be right around the corner.
Yeah, and we would like to have some of our legislatures and congressmen on the show just to bring some awareness on that, on what they see coming down the pike. Because I think this will be the first time in a few years where we really see some crosswinds and crossroads in our industry. And they're going to have to maybe take some evasive maneuvers and maybe, have special sessions where they bring in some, health insurance legislation specifically, where it's not just packed in with a bunch of other stuff in these bills that can get pulled or parked for some reason. And I'm very disappointed that ICRA didn't hit that.
And I want to just hit on the fact that our leaders, the people in Senate, Congress, or even here in the great state of Texas, and I learned this while going to the Hill and actually knocking on doors and to teach people, to talk to them about like, hey, here's what's going on as far as the industry. Here's what's going on as far as going back to fraud, even with the fraud stuff that was going on in the industry. A lot of people that we talked to had no idea these things were going on. So I think you're doing a great service to bringing on, great people to this show to educate them as to what's going on in their area, in their community, and how it's going to be felt.
We're really looking forward to bringing that awareness. We're almost out of time for the show. I did want Mike to also bring up, we teased you a minute ago with this, the health sharing. If we can spend just a minute or two on that, and then we'll wrap up the show. But there's health sharing plans out there. You see the advertisements or hear the advertisements about that. We'll be able to bring some value with Texas State Insurance Services on that. But Mike, give us just a moment to discuss that.
Not all health sharing plans are created equal or the same.
Yeah.
I will say that just doing my due diligence over the years, and I always believe in the fact that I'm never going to ask partners to bring something on unless I wouldn't sell to my own family as well. That to me is like point number one right there. Altra Health Share is a wonderful program that everyone should start looking into. The terminology is going to be vastly different from medical insurance.
Yeah.
It's not medical insurance at all whatsoever. It's an alternative solution that could actually be viable for the people that are on the healthy side but don't want to pay extreme rates. For example, my wife, she was on a silver-like plan. I think they called it like a diamond or a ruby or something along those lines.
So they had different tier levels.
They had different tier levels. Her middle of the road plan that gave her the coverage that she was looking for, the benefits that she was looking for, was only $149 a month.
And that's why I wanted you to bring that up, because it could be a significant alternative that we want to bring to the market as well and revisit. We were doing plans like that prior to those tax credits and subsidies getting extended or increased, but we're going to be there to help review individual marketplace plans for you, short-term medical plans, the indemnity plans, maybe a direct care primary care model that's going to complement a high deductible plan. We'll entertain the employee benefits in the ICRA situation as well, and the health sharing plans and those ministry plans as well. It can get exhausting, to look at all those, but this is more than ever the most important time that we've probably seen in the 12 years of the Affordable Care Act or in its fruition, to really take a look and analyze these plans, get with your agent broker, and discuss those options with them. Again, my name's Justin Holland with Texas State Insurance Services and Palmetto Life Group. I can't thank Mike Papuk with the Brokerage Inc. for joining me for a few minutes today, providing some awareness. I think we knocked out the short show, and we're going to have plenty of time to try to have Mike over for another visit, maybe with another guest or carrier, to where we provide some more value to everybody. We can't thank you enough for joining us for the show today. Take care of everybody.
All right. Thank you.